Welcome back. Hope you're having a fantastic day. Let's take a look at the markets. Bitcoin, crypto, and traditional markets. Yesterday, I put out a video that the stock market could drop another 10% from yesterday's levels or recent rebounds, and that crypto could potentially drop 20%. And we'll take a look at what's going on so far. The market is about to close in 30 minutes. The Dow Jones is down almost 1%, S&P down 0.7%, NASDAQ down 0.65. So a little bit of a reversal of the up days that we've been experiencing the last few weeks. And mainly this is because of the Russia-Ukraine war, Russia's war on Ukraine. There was a lot of positive anticipation of ceasefire, peace talks, things like that, which have since deteriorated. Russia is using some time to reorganize and consolidate their attack on some other areas. So they have no intentions of negotiating any ceasefires at the moment. And so, investors are still looking at the uncertainty of that situation escalating. The United States is releasing oil reserves. So there's a lot of concerns about energy costs. Inflation is still a big one. Another one of the Fed's inflation markers came in higher than it's been since 1983. The core personal consumption expenditures price index was up 5.4% from a year ago, the biggest increase in 40 years. No surprise, inflation is out of control all across the board. And then again, the biggest news recently is the housing market. Pretty much every day there's news about the housing market and what is happening there and what that can mean. That's a big area of wealth for a lot of people around the world that is at a tipping point and a potential for, looking for an article. I can't find it right now, but oh, here we go. Well, this is one, just people spending too much money on repairs, but housing market being a big store of wealth for a lot of people all around the world, with the appreciation that they've seen over the last couple of years. So a lot of interesting thing. U.S. auto sales are falling as well. People are pushing back on prices on cars and also inventory levels and things like that. So a lot of uncertainty out there in the economy right now. People are starting to feel the inflationary pressures with fuel, food, housing, things like that, and housing with interest rates reaching the highest levels that they've been in for a number of years is starting to, we're starting to see a little pushback in housing in some areas. The Sun Belt is still pretty strong, but other markets are starting to cool off a little bit internationally as well, not just the United States. So let's take a look at the charts. Here's Bitcoin on the hourly. Yesterday, we were in this area here consolidating when I said this looks a lot like these other areas of consolidation where we had these, 20, this one's about 17% right in here, but 20% drops. This one is 24%. This one's about 20. This one was 17. So these areas that we are looking at when price consolidates before it reverses, and the biggest reason that we had indications of reversal was, number one, this is the 200-day moving average where the rejection came in. Number two, leverage. So open interest had reached, I don't know, $13-14 billion, which is the highest it had been since the December drop that initiated everything back in this area here, November, December timeframe. During that big drop, open interest was at that same level that we're at now. So again, what happens is you get up here and everybody's going long and taking leverage when you should really be shorting right here after a big run up like that in Bitcoin. This was a pretty much unabated run up to 28% run from 37,000 to 48,000. So that's a $10,000 run right there over a very short period of time from 13th of March to the 28th of March, over about 15 days, couple of weeks. So once you hit that point and you start to consolidate, you have to, that's where you want to take a short, not necessarily go long in a declining market. This is a down trending market still. When you look at the daily, the difference in this area here, it's, the trend is down. There's a little sideways consolidation trending up a little bit, but the overall trend is still bearish. versus being over here where you could expect bullish continuation. You're in a downtrending market till reversal, meaning you got to get above 69,000. That's when market is reversed and you're in a different trend where you're putting in higher highs and higher lows versus this is just another lower high, right? So you have, that's what people lose sight of when you get a big bounce like that, is that as you go along in these markets, you have your high right here, then you have your lower high, and now a lower high. So this is a great rebound and a great bounce, and kind of retracing this entire move right here. Kind of looks like the Wyckoff pattern that everybody talks about with a spring. And of course, most people are bullish when you get a move like this. So everybody's looking for that spring up. Well, Wyckoff also has a distribution where this ends up going down in this whole trend as well. So you have to look at both sides of the equation. When you're in an environment that we're in right now, with the potential of the Fed coming in with interest rate hikes and removing liquidity from the market, no longer pumping liquidity in the market, no longer keeping rates low. And again, nothing's happened yet. So that's why we have these bounces, because all they've done is hike rates 1/4 point. That's why markets rebounded the other day, because once the Fed came out and said, here's what we're going to do, the markets were like, well, wait a minute. All they're doing is raising rates 1/4 point. They're stopping their purchase. They haven't started unloading the balance sheet, and they haven't gone any further. So it was basically bull market on until we start getting closer to the next Fed meeting, when they're going to raise rates 1/2 point and be a little bit more hawkish, probably a lot of bit more hawkish because of inflation and other things that are happening around the world, things like that. So you're going to start to see markets reprice again in anticipation of that 1/2 point rate hike. And that could be what is starting right now. When you're in these declining markets, you get big bounces before you get the ultimate reversal. So price has to get above these daily moving averages like we talked about the other day, rejected at the 200 and is moving backwards. So the next stop is the 100-day moving average, the 50 and the 100-day moving average. So we got to see how price reacts when it gets back to those levels. And of course, if you look at it on the weekly, like we've been talking about, you have this potential cross coming here between the 50-week and the 100-week, which generally leads to more downside whenever that cross happens. Price will generally go down and check that 200-week moving average, but price can bounce, price can reverse, and anything can happen. But the fundamentals right now are a little bit different than they were before, back in this area and back in this area before the Fed put is no longer out there in the markets. The other thing that we had going on with this pump here, obviously, was the Do Kwon purchase, Luna, and again, just printing cryptocurrency to buy Bitcoin out of thin air, basically, is what's going on here. So that's an artificial pump of the value of Bitcoin based on that. And then, of course, you have Michael Saylor with a $200 million buy, not moving the needle in a big way, but even in this market, as illiquid as it is, meaning there's not a ton of Bitcoin on exchanges, that can move the market quite a bit. But once those buyers are done, price drops back down again, because there's no real retail buying going on. Other institutions, investment banks, they're not buying at these levels. They're not jumping in. This is all basically Do Kwon pumping the market with Michael Saylor. And as soon as they stop, it falls. And then, of course, it's leveraging. This is long and short leveraging going on here, while the market consolidates and waits for more adoption, which is kind of what's happening. The whales are keeping price up, waiting for more investment banks to come in, more broad scale adoption to come in, so price can push back to this level again and start running and reaching for a new all-time high. Next video, we'll talk a little bit about that and what it's going to take to get the market to a new all-time high. But right now, you have too much leverage in the market. You've got a lot of liquidations going on in those long positions, probably some more downside to come. I was looking for a 20% pullback, so we'll see if it gets there. It may not. I don't know for sure, but I do know that the last time we reached a open interest like we've seen at 13, 14 billion, we had a 20% pullback. So that's kind of where that's at. And of course, the markets are susceptible to headline risk. So anything negative in the news with the war, the economy, things like that, the markets are going to have a knee-jerk reaction. So you have to be prepared for that. And it can go the other way. So if we all of a sudden get a ceasefire, if the war is all of a sudden over and Russia pulls out and they have a ceasefire and they have a peace agreement, then markets will rally on that news. The other thing to watch is the Bitcoin conference is coming up, and apparently there is some speculation about some news and announcements coming out of that. So we'll have to see how that unwinds. Last year at the Bitcoin conference, the price dumped. So we'll have to see if that follows suit this year. So just something to keep an eye on. I will see you on the next video.